Okay, guys, hope you're well. So, as I said, I will be covering one of our assets kind of per day while I'm on the road, as long as I'm not traveling. So, today, let's cover Bitcoin. Quite a bit to go through on this one. Let's start with the fear and greed. So, we are back into fear. So, last week, actually, when we did the presentation, we were at 24. It says here 25, but 24 we were. And yesterday, just getting back into the fear category, not extreme fear. We went all the way down to 6 as prices dropped, and certainly we've seen a little bit of a rebound in the market, but looks like maybe we're starting to stabilize. Certainly the sentiment is starting to stabilize in the market. So let's have a little look at what's been happening with Bitcoin overall. As I said on Tuesday, I think the biggest culprit that has been clear, of course, there's been many narratives of why there's been a drop, and I'm sure all of the narratives have contributed to the overall drop. They tend to sort of cascade, but I think the biggest one really is the liquidity issue that we've seen in the markets. And one key thing to know about liquidity, as liquidity drives up, it's going to hit higher risk assets, smaller risk assets first. And Bitcoin, although certainly as Bitcoiners, we kind of just think it's huge. It's actually a very small asset class at the moment. Even if you just compare it to Nvidia's way more than double the size of just the Bitcoin market. In fact, Nvidia's bigger than the whole crypto market as well. So I thought I'd just list some of the things that have happened. We rolled back to 1010 when we had this big liquidation event over the weekend. I think the key things to note there were the timing of the liquidation event. Largest liquidation we've ever seen in crypto, 19 billion wiped out as we moved from the all-time highs. So yeah, that happened on a Friday night. US markets closed, CME closed, which is the futures markets closed, Europe was closed, Asia was closed. So interesting timing, maybe a little bit conspiracy, but it was an interesting timing of that, of reducing all of that leverage, that over leverage which was in the market. And again, just to reiterate for myself, I tend not to like to use leverage in asset classes that are highly volatile, particularly with Bitcoin, where the exchanges do seem, as I was mentioning on Tuesday, do seem to be able to control the market a little bit and wipe out the liquidation that is in the market, as they can see, certainly all the order levels. So that was back to 1010. Government shutdown didn't help, sucked out 700 billion, which is definitely going to cause some problems. Then we rolled from the middle of October, where we had a 90% chance of a rate cut coming in December, which is going to be happening next week on the 10th, to a 30% chance. So that had a negative effect of no rate cut, meaning that liquidity would potentially tighten up, and fears on that. China reasserts full crypto ban, which created more doubt, and on the 29th, S&P downgrading Tether, which liquidated 20 billion. So what happened on Monday, certainly Monday in Asia and Australia, but it would have been Sunday night in Europe, was on the back of Thanksgiving, thinner volume. We had a further crash, 5k within minutes. It actually was about 9k came off Bitcoin. As what was seen, some of the story being that the Bank of Japan hinted higher rates, which meant that potentially you'd see a little bit more unwinding of the carry trade, where people are borrowing money in Japan, potentially buying at low rates, potentially buying Bitcoin, and gaining on the arbitrage, on the spread on that. I personally think that one has been sort of been unwinding for quite some time, as we reported, or I reported on it some months ago. I think it it was into the summer at that time. I think one of the main culprits was the market makers really just dumping Bitcoin, exchanges dumping on, and in thin volume, it can really cascade the market. So that was, the 9,000 drop. Overall, though, 35%, 36% off the market since the drop. Silver linings at the moment. Now, we've been through a period of quantitative tightening. That ended at the beginning of the week. We've started to see some liquidity come back in. Vanguard giving the green light to crypto after a big U-turn, and hodlers accumulating as well. So we could see, certainly we have seen a very quick rebound this week from the latest round of liquidations. But rolling back again, just worth just looking at this chart again of going, right, okay, this is since 2024, fairly normal to see 30% plus pullbacks in the market, 33%, 31%, 36% at the moment. Still holding. These are weekly charts, so this is now we're into the second week of this market holding these levels. Could we go down a little bit more? Yeah, we could go down a little bit further, but at the moment holding and it looking fairly normal if we just zoom out with the charts a little bit. This was the Monday morning, Sunday night in the US. Here was all the big selling from the exchanges, and Wintermute is it's a market maker, and selling into the market. So again, on thin volume, thin liquidity, these big sells can really push the market down. So we saw that at Sunday night, and here is the low on Monday, almost 10% down from those Sunday highs. Very quick rebound in the market. 2 days, and the market was up 12% this week, coming off a little bit this morning. So here's the Fed pushing some liquidity back into the systems, 13.5 billion. Second largest liquidity injection since COVID, and surpasses even the peak of the dot-com bubble. So good news there, and we should see liquidity coming into the system over the coming weeks and months. Now, we looked at this last week, or we've looked at this for the last couple of weeks actually, of what happens when we're in extreme fear in the markets, and 1 day, 2 days, 5 days, 1 week, 2 weeks, and 1 month. So we looked at the 1 week last week, and we were rough and tough around this level. So let's have another peak. So 9% is kind of the average, and we'll just look at this out of interest every week. So if we look at it from when I posted it, which was generally it's always the Thursday for the update. So if we look at that first week, we were 4.7, so around about the 5%, and then if we look now, we're up 8.7% from here. Of course, we've gone lower than that, so we're kind of around that level. If we look from the lows, though, we have recovered 16%. So all seeming like this is lining up. Potentially. Yeah, we could be back up to the 100,000s within the next couple of weeks. So ETFs starting to see a bit of life from last week. Flows starting to come in. A little bit of a negative day yesterday, but that's good that the markets are starting to pick up. BlackRock assuring investors, saying it was fairly normal to see some of these mid-month redemptions in the market, so they're assuring their customers that everything's okay, and that there was a bit of panic selling, which there's always going to be as that fear comes in. Unfortunately, when we move into extreme fear, a lot of people panic and they start getting out. Particularly what we saw, and I don't have a slide for that, but particularly what we saw was a lot of the newer holders of Bitcoin ETFs or Bitcoin in general coming out of the market. These are people that maybe have bought in the last couple of years and just perhaps not used to the volatility of the asset, and that's something that I said at the conference, of really kind of knowing the asset, knowing what's kind of normal, what's the normal volatility of this asset, and yes, it can move 50%, but what has happened to the overall narrative or overall reason for the investment? Nothing's changed. So in my eyes, it's short-term noise, and hopefully in a few months from now, we're looking back on this as a bit of a blip. Okay, so this is the interesting U-turn from Vanguard. That back in 2024, they saw Bitcoin as speculative, and they thought it didn't belong in a long-term portfolio. Meanwhile, BlackRock, with their IBIT, it actually is their most profitable ETF. One, it's the fastest growing ETF ever, and two, it's the most profitable. And in 2025, yeah, a little bit of FOMO from Vanguard, and they've done the U-turn and started to let their clients invest in crypto assets, which is big. It's really big. They're probably one of the largest, second largest out there. So again, the walls or the on-ramps are slowly coming in for people to get invested, potentially 1 to 4% of their portfolio in either Bitcoin or the crypto markets. All right, with that, let us have a look at the charts and see if we have a buy coming in for us, and we'll go through the data there.